This week on the podcast, help. I need somebody to help me with my cash flow. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. So this week, Claire, we are panicking, aren't we?
Why?
On the headline of the podcast.
Oh.
I'm about to run out of cash. Help!
Yeah, we are, aren't we?
It's the end for me, isn't it?
Well, I think we're being a little bit on the dramatic side here.
Dramatic gets clicks.
But yeah, your business is not going great at the moment, is it?
No, that is not what's happening. We'll tell you more later. Anyway, more importantly and more shockingly is this week's news story of the week. So this week's news story literally just broke. The headline says HMRC can't be bothered to send letters, in brackets, unless you owe it money. Bit of a weird headline. I don't know why they've gone with this one. Basically, the headline's really simple. Finally, HMRC have decided to stop sending people bits of paper in the post and actually digitise for once at a saving to them of, well, not to them, to the taxpayer, of £50 million. What do you think about this? Do you think they could have done this sooner, or do you think it's too soon?
It's disgraceful that it's 2025 and this is happening. I do not understand. Actually, a similar headline came out as well about the NHS, similar sort of time, that they're going to stop sending appointment letters via the post, and that now we can use the app and get appointments on the app unless you opt out, like, you know, if you're an elderly person or don't have an email address or something like that. But apparently a third of all users of the NHS app have already opted to receive notifications only digitally. So there's a third of all people that they could just stop sending stuff in the post to, but they're not doing it at the NHS. So I imagine with HMRC it's a similar thing. But I mean, for our audience, if you think about most taxpayers, they will have an accountant or somebody like that that's their tax agent. And when you're a tax agent as an accountant, that means that your client has authorised you to act on their behalf, so they can communicate with HMRC, file tax returns and things like that for you. So it means whenever HMRC are sending notifications, not only are they sending it to the taxpayer, but they're also sending it to the agent as well. But it's just stupid bloody things. Like, as an agent, when I receive a notification in the post, it just has somebody's tax reference on it, like their 10-digit UTR tax reference number. I don't know who that belongs to, so I then have to go into my system and type it in and see what business or person it relates to, and it's just, the whole thing is just painful. So yeah, but I would have expected more than 50 million to be saved, to be honest. I think that that's probably just the cost of postage.
I mean, to be honest with you, like, the whole news story is a bit misleading anyway, because the way that this reads, you make it's 2025, you think they're going to stop sending letters next week. It's going to be phased out between now and 2029.
Yeah,
it's 5 years. Well, in fact, it says it hopes it will reduce its letter send by 75%, not even 100%. By 2029. So it's not even like they're just getting on with it. It's just ridiculous. I guess the question is, how much of an impact will this have? Because actually, as we know from with our marketing hats on, 80% of all emails remain unread. So how should they communicate with people if 80% of emails remain unread?
The whole problem with HMRC is their systems and the way that it's built. For example, if you think about Amazon, you log on to Amazon as an individual. You can access Amazon Prime, where you order stuff. You can order from Morrison's. It's a separate grocery app. They've got the warehouse. Hang on, I'm going somewhere with this. You know, you can access video. You could even switch between a personal account and a business account, all from logging on with an email address. The whole HMRC system is built on this ridiculous concept of government IDs. So I've got, like, government IDs, government gateway IDs coming out of my ears, because I've got a personal one, I've got one for my business, then every individual user in my business has their own one. But if somebody loses it, you get another one. And
so the tech just hasn't been built, the infrastructure of the tech hasn't been built correctly.
Yeah, I've got different government gateway IDs to act as an agent. I've got different government gateway IDs to file different things. And the whole thing is just stupid. You should just have a login. If HMRC make it easy for people to log in and access all the information, then people wouldn't miss notifications.
It's interesting because we were watching that guy, the reform guy, Youssef, like, I don't know, last night on Question Time or whatever else, and he just gets like ridiculed, doesn't he, when he like talks about actually like changing something or reforming rather than just giving it more money.
Yeah.
But yet we sit here like week after week with whatever departments we talk about that are government related, and it's just almost laughable. Like, you've got this situation here where, like, this action of stopping sending letters is almost precisely 20 years late, isn't it?
Well, yeah.
Like, I mean, probably most private organisations stopped sending letters around 2005 to 2010, didn't they?
Apart from the really big ones. So, I think banks are particularly bad this as well.
Yeah. And it's just like, it's just so late on in the day. Just makes you feel like, with the whole world we're going through with AI, I mean, like, so the government's going to be 20 years away before it really embraces any of the technologies and the benefits that we've got on our doorstep right now. And that's
I mean, we're not even talking about AI, are we? We're just talking about an email.
We're just talking about an email at a point where emails now really the snail paced digital form of communication.
Yeah,
like. People like, it's instant messenger now, or
and
apps,
notifications on your phone,
and apps and various other things. So they're at the point where they're implementing a system that's already obsolete.
Yeah,
and that's
I just really
disappointing. I feel I don't like. It doesn't make me angry. I just feel sad. I feel it's sad. It's quite sad, isn't it? Because it is like, you can't. It's like a 2-horse race. You can't the two do need to run at the same pace. You can't have like private organisations that are running a million miles an hour and just way out in front here. Whereas where you've got, like, we do have a government that wants to, or believes that they're the ones that are controlling growth. So you can't have those two things that aren't running at the same pace. It's just crazy, really.
I cannot explain how much of a barrier to growth HMRC is, because if you're a business that's looking at doing something and you need some tax advice and things like that, often accountants will need to write to HMRC and ask for clarification or disclose certain things, and you just cannot get a response from them.
Yeah.
I think that's what's the shocking thing. So another thing, that if anybody is listening to the podcast and in the construction industry, they'll know that there's something called the construction industry scheme, and actually a customer can just make a mistake on a declaration and they can deduct 30% of your bill and not pay it to you. Instead, they pay it accidentally to HMRC. You have to claim that back. Now, at the moment, HMRC are only dealing with those claims from February. So if your business at the moment sitting there with a black hole of 30% where a customer hasn't paid you, they accidentally pay something to HMRC because they ticked a box wrong on a declaration. And they're only now dealing with those claims. So even from like a cash flow perspective, they're just absolutely disgustingly unsupportive of businesses, and the whole thing needs reforming from the ground up with a business first or a user journey perspective and not a compliance perspective.
Yep. I mean, and it's not just HMRC. We have the same thing. I had the same thing all the time with Land Registry, another government department. I think we literally have just this week had a registration through for a property we bought 18 months ago. It's taken 18 months just to change the ownership name on the deeds. That is disgusting in this day and age.
It's beyond me, because it's beyond me why that is not a digital system and a box checking exercise.
Well, it is a digital system apparently, but obviously not. So crazy. Anyway, let's move on to this week's deep dive. So, I'm in despair, and this has never happened before, Claire.
Has a little rhyme.
Yeah. In 9 years of trading, I've not been in this situation before, which is I'm about to run out of cash.
Yeah, you are.
And
why are you going to run out of cash?
Well, because actually, part of me doesn't know, which is not helpful, is it? Because I should be forecasting this stuff. I couldn't have predicted what's happened. So basically, they obviously had this like stamp duty change in the end of March, and obviously it forced. March was a very strong month, not insanely, but a very strong month, and arguably forced forward transactions from following months. So our expectation was that we'd have a really good March, but then we would have, certainly a bad April, and then it would be back to normal, like nothing exciting, but normal from May onwards. And we saw this with the much greater stamp duty holidays over COVID, which were much bigger sums of money. I mean, this one was like $2,500. The others were like $6,500 and $10,000. So the cliff edges were much bigger, and it's been much worse this time than it was the last time, which is ironic, which is this absolute drought of property completions. And it's not just us, because I've spoken to estate agents and people in the industry up and down the UK who are saying literally 2.5 months after this they're just not seeing properties complete. And you could have predicted a slight downturn, but you can't really understand why everything's just got so stuck in the system. Because the irony is we're about to run out of cash, but we have the largest pipeline of sold properties by value that we've ever had. So we've got this enormous constipated pipeline that is about to explode in diarrhea all over our P&L. But when?
Yeah.
And that's the panic.
And basically, these are houses that have gone under offer and they're stuck in the legal process.
Yes.
And you only get paid when they're complete.
Yeah.
So March, there was a stamp duty change. And so loads of transactions happened before March. And this is also, to be fair, this is also, it's not a lifestyle business in such that you're living the dream, but it's a lifestyle business in that you're basically just taking the profits out of the business. You're not really reinvesting anymore and growing it and things like that, are you? So
it's a cash.
You've also, you've got a business partner and your business partner's doing house renovations. So he wanted quite a large dividend. So you took all of the cash out of the business and you took dividends. And then the pipeline dried up.
I think this makes a really interesting conversation and I brought it to the table because business owners have this challenge all the time, which is seasonality hits or something happens and they have a bit of a panic where it's like, I'm about to run out of cash. What do I do? And I just thought we'd bring that to the podcast because you, as an accountant, must see this all the time where people have a bit of a panic and it's like, what are my options? And I thought, let's work through those options now, live on the podcast, so that we can share that with other people. What are my options? The business is in the best shape it's ever been. Like I say, the front end of the machine is phenomenal. The back end of the machine in terms of the sold and the pipeline of what's about to be paid out is phenomenal. So there is no worry about the profitability of this business. There is a cash gap now as a timing issue.
So this is not rocket science stuff. You've got two things that you need to do.
You said I couldn't just go and tell my employees that I wasn't paying them this month. You said that's not an option.
That's not
it's not even on the list.
It's not even on the list because it's honestly the very last thing you would ever do.
Yeah.
But I mean, the not rocket science bit is that you need to stop cash going out and you need to get cash coming in.
Okay.
Okay. But what we're going to do is we're going to talk through the 5 steps that I would take, and I would do it in this order as well. Okay. And what we're not talking here about, how you would plug a cash flow gap if you were maybe growing your business or you saw that there was going to be a cash flow problem. I can't remember, was that a cash flow problem in maybe 3 weeks or 6 weeks time? We're talking about right now, you do not have any money in your bank. That is the problem you've got today. We're talking about that sort of crisis situation that you're in.
It's like I'm about to just
payroll.
Do one more payroll and there's a couple of grand left in the bank.
Yeah.
What are my choices?
Okay. So the first thing that I would always do is speak to customers and get cash in. Now, often people are so nervous about going to speak to their customers, and I think, not all businesses you can do this for, like your business. You simply couldn't do it. Legally, you cannot get paid until the property completes.
Yeah, and we don't control the legal process.
Most of our audience is going to be B2B customers. And therefore, if you've got a B2B relationship, actually, you should have relationships with your customers that enable you to pick up the phone and say, we could really do with getting some cash in. Can you help us out? Now, often you can have quite
asking customers to pay
early
before the due dates?
Yeah.
Okay, yeah.
So pay before the due dates, and you can often do this by just offering a bit of a discount.
My concern with that would be if I got that call that all of our customers think these guys are about to go bang and they start looking at alternatives.
No, I totally agree with you. And that's why the relationship with the customer is important. I'm not suggesting for 1 second that you ring every customer and say, we're having cash flow difficulties. Can you pay us now, please? That's not the conversation. You're picking up the phone to the people that you'd be like, hi, mate, I need a bit of a favour.
Would you, given the fact you started by saying you're putting this in priority order, would that be the first place you go? Because it feels like to me it'd be towards the end. It'd be a bit more like, oh my God, I don't want to flag this to my customers until I've done the other things first.
Yeah, but what did I just say? I said you're picking up the phone to the people that you're going to say, hi, mate, I'm in a bit of a sticky situation. Can you help me, please?
Okay.
Those people. And I would say that in my business, I could probably do that with at least a handful of customers. And I think a lot of businesses would have that relationship where they could do that. They've got somebody that they could call and say, if I give you a bit of a discount, can you bring forward the payment, that type of thing.
Okay,
it's not that unusual either, actually. Working in humongous organisations where we were doing like hundreds of millions, we would regularly have customers come to us and say, there's an outstanding balance, it's our year end coming up, or we've got an audit, or we're doing this, we're applying for finance.
That's in corporate because you were 90 days beyond the payment date anyway.
No. It was, can you pay us now and we'll give you a 5% discount?
Yeah.
And if it was quite a significant discount, we absolutely would do it.
Well, companies do this on an ongoing basis. It's like pay by this date and get 5% off, like energy companies and things like that. I've seen it many times. So yeah, it's just incentives, isn't it? It's got to be a win-win.
And the reason why I put that as the highest priority is because your issue is cash coming in.
Yeah, I like the fact you've presented that as a win-win, not just I need a favour and alarm bells go off, but actually just say, look, if we were to give you a 5% discount on that, could you pay us, in the next 48 hours, this particular invoice? Yeah. That sounds like a win-win and the customer feels a little bit better about it. I think probably it's a good one.
Yeah. And Great. I really stress it's about the relationship with the customer. If you can't talk to them...
Don't blanket email them off.
Yeah. Don't go doing that. That'll land you in a bit of bother and you might lose some customers from it.
We're just shuffling the deck chairs on the Titanic. Could you pay us a bit earlier?
Okay.
Number 2.
So, number 2 is your suppliers.
Yeah.
So, again, this is all about relationships. If you're a business that doesn't have a relationship with your customers or suppliers, then if it's very transactional, you're going to find it difficult if you find yourself in this situation. But with your suppliers, again, pick up the phone and explain to them what's happening. Don't give warts and all. You don't need to tell them why. But in most B2B businesses, you can guarantee that somewhere down the supply chain, your cash flow issue is caused by somebody else not paying you.
Yeah.
So if you just simply pick up the phone and say, look, we just had a bit of a hiccup, the timing of this project, it just means that we're not getting cash in for another couple of weeks. Are you all right if we delay your payment for a couple of weeks?
Yeah.
That, those conversations are happening all the time, particularly in small B2B businesses.
Is to actually tell them rather than just make the payment date a couple of weeks later?
Yeah, look, I think you've got to make a judgment call here because there are a lot of businesses that are not good at credit control. And if you just don't pay them, they're probably not going to notice, at least for a week or so. So you could buy yourself a bit of time doing that. But if you've got a particularly large supply, if you are owing them, like 20, 30, 40,000, pick up the phone and have that conversation. When I was a finance director, again, in a big business, if a customer ever said, I can't pay you because we have a problem, that was when we would all get around the table and be like, okay, look, thank you. We really appreciate you being honest. Let's put some steps in place. Let's fix this. Never once did we take somebody's credit limit away. Never once did we beat them down and say, tough shit, you've got to pay us. That never, ever happened. We were so reasonable because we were worried about the longer term relationship with that customer. Of course, in the background, we'd run credit checks and things like that.
Just
to double check. But if you're upfront with your suppliers, 9 times out of 10, they'll be quite receptive back to you.
Cool. Right. Number 3?
Direct debits. Cancel as many direct debits as you can. Now, you've got to apply a bit of judgment here because you're not going to go and cancel your Xero subscription, are you? When it's like £30 a month, that's not going to move the dial.
Yeah.
And you're not going to cancel your insurance direct debit.
But your VAT?
We're moving on to HMRC next. But anything that, often you can go onto a system and just ask that your direct debit gets moved to a later date in the month and things like that. So just see if you can just push those direct debits back constantly. Often, if a direct debit bounces, then the company will just call you and say, your direct debit's bounced, we'll try and take it again in 3 days.
Yeah.
That type of thing.
So that's 43 days.
Yeah. So you can buy yourself a little bit of time with direct debits, but just cancel as many as you can, delay them, move them onto monthly payments instead, temporarily, that type of thing. Number 4, HMRC.
Yes.
People get so scared about not paying HMRC, but HMRC are very receptive to it.
I feel like it's like I feel like, didn't we cover a news story once where it was like, I don't know, it was a massive number. It was basically like 60% of people don't pay on time or something to HMRC.
Yeah.
Like,
there's
certainly self-assessment. And they're just like,
humongous
they're just so used to it. It's like, oh, well, you pay a bit of interest and you may or may not get a fine, but probably not if it's a short space of time. Just pay the interest, pay it up in a few months' time and bring it back on board. So there's free money to be had from HMRC.
The crucial thing here is that you have to speak to HMRC. You have to tell them you're not going to pay them, and then they only charge you interest.
Right.
If you don't tell them, they fine you. And the fines keep racking up, and then you start paying interest on the fines.
How do you tell them if you can't get them on the phone?
Well, you don't need to get them on the phone.
Just email them.
You Google time to pay arrangement and you can request online. You can just fill out an application form online. Yeah. And some of them, so I think VAT, I think the threshold, I think it might be £50,000 now. It changes because it got shifted about a lot on COVID. But VAT, for example, you can apply online and you can 9 times out of 10 get instantly approved.
Yeah. I mean, you'd like to hope, going back to the news story that we had about how shocking government services are, that they're not good at credit control themselves, wouldn't you?
Yeah, exactly. So you'll just get letters from HMRC saying you haven't paid us. Yeah. But crucially, you have to tell HMRC, you have to get a time to pay arrangement agreed with them.
To avoid the fine.
Otherwise, you're going to be getting fines every month, and then the fines start incurring interest, and all of a sudden, I'm working with some people and they're literally racking up, I've got one customer who came aboard and they had a bill that dated back 7 years, and the fines and penalties related to that are racked up to like £8,000.
Yeah.
Because they just buried their head in the sand and not dealt with it.
Yeah.
But as standard, you can normally get 12 months with HMRC to pay them. But if you need longer, call them, because they can agree repayment plans over a number of years.
Okay, annoying. Now I'm up to date with HMRC, which is annoying.
Yeah. So yeah,
till corporate tax payment.
Most of the time, I suggest you get HMRC on a direct debit.
Yep.
But obviously, make sure you cancel that direct debit. You need to cancel that direct debit and agree a time to pay arrangement with them.
HMRC payroll taxes, the monthly ones.
Yeah, it's the same. You can get time to pay arrangement on corporation tax. Well, on corporation tax, I don't believe you even need to request it. I think as default, they just charge you interest. But good practice, I would say, just tell HMRC you're not going to pay them, because otherwise you and your accountant are going to be getting letters, and your accountant will then probably start charging you for processing those letters and reminding you that you need to pay HMRC. Tell your accountant, tell HMRC.
Okay, perfect. Great. And finally, number 5
is loans. So when we're thinking about getting cash into the business, if we can't get our customers to pay us, then the only other thing we can do is look at a loan.
Yeah, I just want to bridge the gap.
Yeah, we need to bridge the gap some other way. So, obviously, the first thing that a lot of directors will do is they'll just put some personal money into the business.
Yeah.
That makes sense. But if you don't have that luxury, or the other thing that I would always say with a bit of caution is, if you are in cash flow pain, then you need to understand if you've got a way out of this or not. Because if you don't have a way out of this, I would say do not put more personal money into your business.
Yeah. So in my scenario where I know I've got like many 6 figures worth of pipeline that's about to drop over the next 6 months, it's like, yeah, I know I'm putting it in and I'm getting it back out. Yeah. It's an in-out. There's almost zero risk to it. I mean, pretty much it's pretty much zero.
Yeah.
Because that pipeline, at best 80% of it always comes through. So that's fine. But if you're just like digging the hole deeper and you can't see the end of the road, then that's obviously not a great place to go, especially personally. Because this is where it's like, do you get a loan personally? Do you get a loan through the business? Because it's a limited company, and that's a wrapper that protects, that if you're in this, should you be getting the loan through the business if you're unsure whether it's going to
it's a really, really difficult one, because if you get a loan through the business, you're going to find it difficult to get a loan through the business because you're in cash flow problems.
Yeah, okay, yeah, true.
But so therefore you might be forced to take a personal loan and put the money into the business. But look, I think the reality is that a lot of people will still probably say, even if we couldn't see the end, we would probably still take a punt and put 25-50 grand into the business as a director's loan. I think it's the reality.
Yeah.
And I think a lot of business owners would probably do a similar thing. But just a word of caution that should the business become insolvent and it has to be wound up, then there is an order of how all the creditors get paid, and directors are right at the very bottom. So you won't get your money back if the business does liquidate.
Which is fair enough, I guess, because you've made that decision.
So obvious one, director's loan. If you've got some cash, then consider putting that into the business, because that can be taken out tax-free, and you can also charge your business interest as well. So then we'll be looking at the other obvious thing is to get some credit cards. Business credit cards or personal credit cards, again, just consider the implications if the loan is in your name. There is a platform called Apron, which we talked about a couple of podcasts ago when we talked about our tech stack. So if you haven't checked out that podcast, do check it out. There's a platform called Apron that allows you to pay your suppliers either by bank or using a credit card. So if you are trying to pay suppliers, but they say we don't take credit cards,
you can put it through.
Pay them via Apron, because you can use any credit card to settle it, because actually you're paying Apron and Apron pay your suppliers, but your suppliers really don't know that.
And how much do you lose in that transaction? Presumably, Apron want to take some money off you as part of that.
Off the top of my head, I don't know
what
their credit card fees are.
Or whatever else,
Yeah, so that's a good tip if you just need to plug that gap. But obviously, again, is it a long-term thing? Because you're then going to have to repay that credit card soon. And then you would be looking at, more longer term scenarios where you need to go to a bank or a financial institution. So the other things you could look at would be invoice finance or asset finance. If you've got assets in your business that don't have finance against them, you can quite quickly
easily leverage the assets.
Even second-hand assets, they don't have to be new. You could just get a valuation on the asset and have money in your bank within a few days. That's quite easy to do. And actually, it's quite an easy one to get because the asset secures the loan.
Yeah.
So should you go under, the bank or whoever's giving you the loan just takes the asset away.
Okay,
so that's a really simple, quick and easy thing to do. Invoice finance, all of that type of thing, consider that because you can instantly get cash. But they're pricey.
Yeah.
Which is why they're number 5 on my list. because the first thing to do is just get
Try and
your
get
money coming in from your customers.
You don't want to cost yourself more money when you don't have the money in those other things. Well, I just feel so much better, Claire. I really do. I'm looking at them like, I can't do number 1, but I can do number 2. I can do number 3. I can do number 4 if and when some HMRC money is due. And I can definitely do number 5 because we've got good credit history. And
we'll be remortgaging our house this weekend.
And various other things. So thank you very much, because you've made me feel so much better about getting through this pinch point of cash. And let's move on this week. I know you're dead excited about this one. This week's Profit Cash Growth Extra.
So I live my whole life in speed 1.25, don't I? ChatGPT on my phone.
Anyone that listens to this podcast will know. I say, like, this is the only... I listen to most my podcasts at 1.25 or 1.5 speed, and it brings it up to kind of normal speed. If I ever listen to our own podcast back, I can't speed it up at all because Claire's already speaking at 1.5, I feel. I don't know whether that means you're getting so much more bang for your buck. In a half an hour podcast, you're getting like an hour and a half's worth of content, or whether it's just too fast for people. Do you reckon with our podcast people slow it down to 0.75?
Yeah, 0.75, I try so hard to speak quicker. It's something that, like, I've known my whole entire life I do, and I just
Hard
can't...
to speak quicker or slower? You mean
slower,
sorry. You said
quicker.
Please don't try any harder.
No, I won't try harder. Quicker. But I just cannot slow it down. It's just the speed
got so much
that
passion,
my brain works at.
The problem is nobody else's does, and so trying to keep up with you, aren't they?
Other than sports, I watch everything on 1.25 because it's just such a time saver. So documentary, we don't need to sit through those emotional moments. Let's just get it on 1.25.
What's the Profit Cash Growth Extra?
The Profit Cash Growth. No, hang on. So I'm getting there. Speed. So one thing that really was a bugbear of mine is YouTube on the TV. You couldn't speed it up. You can only speed it up when you're on an iPad
you
or
can't speed it up.
Phone or something. Yeah. But now you can.
Really?
Yeah, you can speed up YouTube. Sorry, I've got hiccups.
When did that change?
You can speed up YouTube on the TV. I don't know. It's literally, I noticed in the update a few weeks ago that now you can put YouTube on your TV on any speed you want.
That's good. Because I do speed up YouTube often on my phone. I don't know whether it's a bit weird sitting there. It's a totally different, like, they call it, like, when you watch on tablets and phones, back from my media days in the company that I used to work before, they called that a pull-in experience. Whereas, like, TV is what they call like a lean-back experience. And actually, they do feel totally different. Like, and I don't know whether the speed thing would be weird on a TV because it's a lean-back experience. It's so much more relaxed, isn't it? But I don't know.
I literally have no idea what you're talking about.
Just keep the brain moving at 1.5 and we'll
turn
you down
25% of your time back, so you can watch like 25%.
I turn you down all the time, don't I?
Yeah, you do.
Always turning you down. Anyway, thanks, Claire. Well, I'm looking forward to finding out what you're going to be talking about in the next few weeks, because you're just absolutely full of little nuggets. So, as always, I hope you not chicken nuggets. As always, I hope you enjoyed this week's podcast. And if you feel like you might have outgrown your accountant and you'd like to work with Claire and the team at Profit Cash Growth, nip over to the website, profitcashgrowth.com. On there, got loads of free resources you can dive around, as well as the whole evergreen back catalogue of the podcast. You can also order a free copy of Claire's book, Profit by Numbers, on there, and we'll post it out to you. And hope you've enjoyed this week's episode. And do share it with a friend, especially if they own a business. And we will definitely see you again next week.